Afternoon. It's Monday, the second day of February 2009. The market's closed here, and we finished with a gain for the markets today. The Nasdaq finished with a 35 cent in the positive column, or 1.2%. But obviously, the market remains broken, and as we'll see in a moment, we did see further resistance up to that $29.60 level. The daily time frame, best thing you could say is that we're neutral in here. But obviously, one look back at a longer term time frame, that is the weekly, we're still clearly in a downtrend, and risks remain very high for any long positions in this market. So you have to continue to be very vigilant about what you hold, and if you decide to hold. This 29.60 level is not only the prior level of resistance, which tried to hold as support last week, but it's also the location of this 5-day moving average, which is now pretty much flattened out. We can also take a look at the average price this market is traded at since the beginning of the year, that is since January 2nd, and right now the VWAP, the average price that the NASDAQ 100 has traded at since the beginning of the year, is $29.52. So we're still seeing a hard-fought battle in here, and really there's no advantage to the long side. You could look in here at this 10-minute time frame and make a case that we're seeing this little inverted head and shoulders pattern. We've seen, I point these out when I see them. I don't try to look for them. Again, only try to point them out when I see them. But we've seen, dozens of these inverted head and shoulders patterns fail during the course of this bear market, and no reason to think that this one will continue higher. But you have to keep open-minded to anything. Flexibility is really what's, people with flexible opinions who can be long in the morning, short in the afternoon, and long later in the day are the ones who are able to make money, because that's what we saw today. We saw a gap lower, and the market then recovered above the daily VWAP, consolidated in here. Then we saw a real nice run away from that daily VWAP, pull back into it, and then the market started to fail in here. I was posting on Twitter quite a few charts actually of various markets, and at this point said I was looking for a lower high and then a failure. We did get that. I was also updating where stops ought to go, and basically that was right around here. So had you gotten short, let's say on this breakdown here, worst case, your stop should have been here. I always like to cover into weakness, or at least partial positions, and then leave a little bit on with those stops for a very small position. And this is where, at this point there was no reason to continue to be short anymore. On the 1-minute time frame, we had seen these higher lows, and then a big volume push here back up through that daily VWAP. So we saw more volume at the end of the day as the market came down, but we did close above it for the day, and we remain, I would say, again, neutral at best. There's still a lot of reasons for concern in this market. I think that if we come back down towards this $28 level rather, then you're going to see further weakness. Incidentally, today where we had seen the market open was the first level that I had pointed out. I drew these lines in on Friday as these are the potential levels where we're going to find support in this market. We opened right at that level. That's where we got the bounce from. Came up and tested the 29.60 level early on, and then close enough to it right in here at about 29.50 or so, and then at the end of the day we hit almost exactly on that 29.60 level, and that's where we backed away from. So still, guilty till proven innocent on this market. Nothing to get excited about. Oil obviously remains broken. Looks like we're probably headed for a test of these lows in here. Close below the recent support. You have to, again, remain open-minded to anything, but here we see a declining 5-day moving average. There's no reason to be a buyer of oil since this last rally failed right in here. Russell 2000 was up 36 cents. This is the one that I continue to think still looks the most vulnerable. In particular, if we get a break, really not below this level, but below this area right here, which is has been the more important level for the market. Breaking basically below 43 could lead to a bigger problem. What we want to see here, if in order to potentially be long, is a move at least back above 46. So we're still below a declining 5-day moving average. we're below this $46 level, and there's nothing bullish here. You can point to these higher lows, and from a short-term trading standpoint, those are tradable rallies. But anything longer than 1 or 2 days worth of trading, there's just no point in being long in here when there's such considerable downside pressure still present here on the weekly time frame and daily time frame. You could even make a case that this is a head and shoulder top, which obviously would be bearish. But path of least resistance on the larger time frames remains bearish. Keep your mind open to any possibility intraday, and this market actually was the first one to get back above this little level that I was pointing out where your stops ought to be, and back above. Didn't really break below the daily VWAP as strong, so it wasn't as weak as the other markets, but still considerably below the more important levels, which are again 46 and then 45.5 here with this declining 5-day moving average. The financials today were also quite volatile. They traded basically flat on the day here. In fact, they according to Realtick here, they closed at $9.24, which was unchanged on the day. This market still below last year's low closing print of $9.40. That was where we had seen this resistance and an attempt at support, in that 940 to 950 level. So I'm going to say that we still need to see it clear at least 940 to 950, and probably even this high right here of $9.60. It's starting to turn a little bit more sideways, just based on today's action, but nothing bullish in here at all. On the 1-minute time frame, we can see all kinds of volatility in here, but we did see some tradable trends within the day on the shorter term time frames, which again is really, I think, it's hard to believe there's anyone but day traders left in this market. Today's volume also was a little bit lighter. That's something just to keep in the back of your mind on all these markets. Let's take a look at the semiconductors, because we haven't looked at those here in a little bit. So the semiconductors were up 50 cents, and this is the strongest market group this year so far. If we take a look at the average price, that is the volume weighted average price since the beginning of the year. We're basically right at it, or just closing, just above it. Still not a bullish picture, but more bullish than the other markets. We still, the bigger level for this market has been really about this $17.70 level. It also came up to the 5-day moving average. It got rejected late in the day here. Maybe breaking past the 1760 level, then perhaps it paves the way for the next potential resistance, which is only a dime away. So it's hard to get excited about any potential bullish scenarios in here. Keep yourself open-minded, though. No reason to be short on a short-term basis when the market makes these higher lows and then higher high here late in the day as well. So a lot of mixed messages in this market, but when you look at the daily time frame, all these moving averages crossing back and forth indicate more neutrality than anything. But again, you've got to always go look back one time frame to see where we really are in the overall context, and that obviously remains in a bear market, like all these markets. So finally, let's take a look at the S&P 500. They were the spiders were down 25 cents, so they did lose 0.3%, and this was the relative weak group today. We're holding right above the December lows, but more important are the January lows that we'd seen just above $80 a share. So this $80 level will continue to be important. We do still see we saw a higher low but not a higher high in here on the 30-minute time frame. We've got a declining 5-day moving average, and things remain very sketchy for the longs in this market.